Good evening. Ira Epstein with your metal market wrap-up, and this wrap-up is for the evening of Wednesday, the 6th of December, 2023, time 5:30 a.m. Central Time. Well, as you can see, the gold market around the 2040 level, silver still staying bid in the over $24 level. Those aren't bad numbers. When we take a look at the bonds and notes, you continue to fall in interest rates. Are we going to get under 4%? In the 10-year, it's possible. The way the market is going, the market just thinks that economies around the world are going to go into a deep recession. What else can explain the rocket ship way that we're falling in rates? I mean, it's just literally the bottom's falling out of them. These are not wrong prices in your energy. We have cracked down to $74 in the Brent and under 70 in the CLF, which is the January WTI. So what excuse will the Biden administration come up with when they don't buy enough oil? We'll find out. My guess is they will continue to tell us, yes, we took out 300 million barrels or whatever the heck they took out. But we can't get it back in the cavern. It's under maintenance. It's going to be that way for years. But we're buying oil under this price. So which side of it's true? It'd be so easy if you came out and just said, we cannot buy oil for the strategic reserve. There's maintenance. It's going to take another year. You can't put anything back into these. That's how it works. Okay, but that's not what they do. So we will see. You know I'm on them for that because I think they lie. And I think that they lie to us, and that's terrible. I just want honesty. We may not like the answer, but we want honesty. There's another ex-president in trouble because of that, right? That is what's going on there, according to the courts, not according to Ira. Okay. So when you and I look at the gold, we are down for the week, midweek now, about 2%, 1.9% on a weekly basis. We've had one wild ride in this market where you got up to $21.50 and you're now $100 an ounce lower. Why is the market stopping here? Well, let's take a look and see what's going on. Ready? It's because the 18-day average is right here. You hear me talk over and over a neutral spot on a chart, line in the sand. That number's around 2027. The pattern on the chart is a spike high, and then we broke down. So the swing line, which is this brown line right here, is no longer trending. You have a higher high, but a lower low pattern. That's no trend. You can see how the market looks with it right there. And now you put that on and you come with the averages. So I can argue 2027 is one of the support numbers. Okay. Where did the market stop? At an upper Bollinger Band. You hear me talk about that all the time. If you want to learn that, you go to our website, iraepstein.com, under the word education, and you'll see Enhanced Bollinger Band course. Go get it there and learn. Next, momentum, down. So when you lose momentum on the upside, markets like to often go back to that line in the sand to figure out what they're going to do. And that's pretty much what I think this market's trying to get done. When we look at the gold silver, now I got to change it, and I'll do that for you. In fact, I'm going to mark it before I close this chart. I'll do it tonight. I was setting this up and I didn't pay attention. When you're over this number, I think you have to have the chart in gold. Now, I cannot do it just for that section. I wish I could, but my charting service won't do that. So I will make this all gold, and when it gets back under, it'll be silver. Suffice to say, silver is now losing to gold. That's the way you look at it. And you can see in silver what it's done. I have been telling you I thought the market would fall back into and try to find really good support between the 18, the 200, and the 100-day average. I don't mind telling you, I even told my longer-term traders today in my subscriber videos that I think that those that want to accumulate positions are going to start buying using these small contracts, the micros, the minis. They'll figure out which ones they want. And they'll start buying here all the way down, even to the $23 area, counting on the fact that interest rates will drop. If interest rates drop, the demand will come back eventually for these raw materials. That is what there's phases you go through. You were just 26.34. You realize you're 24.27. So you have just come down $2 an ounce in market lickety split. And obviously, if they come down, what's copper doing? So copper, which got up to 393, is suddenly back to 373 for all purposes. It too got hit. So again, for those of you that don't understand what I teach about Bollinger Bands, that's where pros come out. They don't buy against it. This has been one painful lesson for people that do the opposite. In the platinum, here's a market that's now getting oversold. I'm going to look for support in the market at 871.70, not a buy zone, but an area where the shorts will be willing to cover. Now the market's got layers of resistance above it. You can see the trend is down, the bias is down. So between 917 and 922.40 is where the resistance is, but I don't get excited about ever wanting to be short in an oversold condition. Doesn't mean that you might not be. I don't want to be. And while we're getting a nice rally in the dollar, is it a turn or a bounce in a market that came, if you think about it, from the 107 area, got down to 102, and it's getting a small bounce, 40% bounce in price, something like that, and it starts running into the 100-day average, the 18, possible failure area. The word is possible. The trend is up for the moment. The bias is up, but you are overbought. Is it easy to trade the currencies here? Let me spell something out. DIFFICULT. Sounds like a song. I like that. Could be a rock and roll song. Difficult is the word. And that's because you have your thrust going one way, momentum getting instantly overbought or oversold, and you start running into key moving averages on these thrusts. That is typical in bounces and as markets are looking for direction or corrections are taking place. What we're getting right now in the commodity market is a deflationary correction. What do I mean by that? Take a look at cattle prices today. What are they down? 5 cents, 10 cents a pound. It's huge. What about dollars a pound? Well, the 100-weight, they're down quite a bit. Okay, what about energies? You're not at $80, you're at 74 in Brent. You're not at 82, 83, high 70s in WTI. You're in the 60s. You've let go of everything 1, 2, 3. What about natural gas? Just keeps coming down. You want me to go further? Take a look at coffee, down 8 cents today. I can go on and on with my story. The point is, the psychology that's been going on here is scary. And what it's done is it took the marketplace and it scared the market. It said, gee, if this is going to keep going where interest rates are falling, who knows something I don't know? People today, I heard a good analyst come out and say, he's convinced the big boys know something that we don't know. What else could explain that radical turn in bonds and notes? I don't know that that's right or wrong. I'm not with the conspiracy theories in life. But what I do say is that it's telling you a story. And the story is that the market has embraced worldwide. This is in the Eurozone. This is in America. Not so much in Australia and New Zealand yet. Coming, but not quite there yet. And the story they're embracing is quick slowdown. We have gone from instant buy, everything get your hands on, to all of a sudden, I don't need that anymore. And part of the other problem they're getting scared of is jobs. Maybe they're weakening as they're not going to be as much around. And if you don't hold on to yours, you may not get a job as fast. Whole different psychology. You're in a twist and turn of that. And as that takes place, people go, maybe I shouldn't spend any money right now. And with that, kaboom. I was watching an ad just as we were talking, and it said, build the steel building. I won't mention the company because prices are going to go up after the first of the year. No, they're not. Those prices are likely going to go down because the material component's going down, and you cannot tell me your labor cost is going up anymore. So that's an older ad. Again, I won't talk about which company it was, unimportant. But that's the psychology people want you to believe. Just 10 minutes ago, I was reading an article on Porsches. Wonderful car, not the prettiest car in my opinion, but a great car by far. Anyone that says a Porsche isn't a great piece of engineering has never driven one. All right, fabulous car. And I'm going, and they're showing me what prices are doing on from 2020 cars and 2021s. 28 to 40% declines from list prices of 2023 models. I was just reading, what is it? Taycan was one of them. I'm reading the article. And 911s are coming down. You used to be able to just hope you can get your hand on a 911 because it was always pricing you out. They're starting to price them like supercars. They're not supercars, folks. They're fabulous automobiles, but they're no supercar. And there's a difference. But is that true? And I'm reading it, and it was a well-written author talking about the current pricing. He's saying, what's going on there? What about Rolex watches? That's another thing that you and I watch. I brought them up before, and I'm saying this all in the metal section because it's important here. I have a buddy in Chicago that's probably one of the world premier used Rolex watch dealers. He gets new ones as well. They're falling out of bed. Okay, so got to be careful here. Things go in cycles. They move back and forth. And as they come with you, you got to wonder, why is that occurring? People are holding on to their money. If they weren't, I can tell you the Porsche would be in demand. They're not making that many more of them. The watches would be for the people that have money. They're not buying that. And then the everyday guy, he's already using a firm. So what's that mean? He's on pay-as-you-go buying. That's not the smartest thing in the world. Be careful here. This market's on thinner ice, thinner than it has been in a long time. Be careful with it. I'm Ira Epstein. See you tomorrow.